Mark Grant of Southwest Securities joining us this morning and to talk about Europe from his office in Fort Lauderdale, Florida. And Mark, you've been watching the developments and the news flow coming through from the Greek side. What's your initial reaction to the passage of this austerity plan?
I was not surprised at all that it passed. I feel quite strongly that it's a travesty for the country of Greece. I think, frankly, the European Union could have been much gentler in the way they handled this, and now they're forcing Greece to pay the price of homelessness and poverty. And I think, yes, they passed it. I don't think it solves anything. I don't think it's going to prevent an eventual default. But I think what's been done to the people of Greece is a great unfortunateness.
Well, right now there's a lot of chaos on the streets of Greece, 10 buildings on fire in the Greek capital. But why do you think, even with this passage of the austerity plan, it looks like they're going to get a lifeline of 130 billion euros from the IMF and the EU, why do you think Greece is still going to default?
Well, in the first place, there's a $20 billion funding gap, which has to be dealt with. And as a matter of fact, the EU... the Troika has asked the countries in Europe for an additional $20 billion. You also don't know, none of us know yet, they approved the initial in Europe, the initial funding for Greece, but now they're actually going to have to put up the money. And so consequently, we don't know who will really put up the money. There seems to be some pushback in the countries of Finland, the Netherlands, and Austria. Also, I don't think that with the additional money, most of it going, by the way, into some kind of escrow account to repay bondholders, that you're going to do anything but plunge Greece into a further depression. I mean, you really have to use the word depression at this point. And I just don't see how Greece has any chance at all of paying back this debt on any kind of timeline.
But, Mark, the markets are not reacting as negatively, I guess, to this vote in Greece and what's happening in Greece. I mean, take a look at the bounce in the euro, in risk-on currencies like the Australian dollar and the Kiwi dollar. It looks like I would suspect that the markets seem a little relieved that this vote has gone through and probably are looking for a bounce back.
I think that's right. And as a matter of fact, in my commentary out of the box, I suggested that would be exactly what would happen, that they take it as some kind of relief rally. We've seen this, in fact, time after time for the last 2 years as people pay attention to the headlines. And then as they bore down into the actual numbers and look at the amount of debt that Greece now has to service and the continual deterioration in the economy, then the markets start becoming more realistic rather than the initial expectations.
Okay, so Mark, you're saying this is just a relief rally? We're not going to see these gains last for the rest of this year?
No, I don't think we'll see the gains last at all for the rest of the year. I think it's just a momentary relief having to do with the headlines that they passed it. But now, remember, in my opinion, this is when the show really begins. Everything up until this point has been a sort of a preamble. Now we have the question of whether the countries placed into default by S&P and by Fitch, if they put in the collective action clause to get all the bondholders to go along. Now we have a question of the CDS markets, if they function, if they're going to trigger. I mean, we have a whole plethora of events now in front of us that have yet to unfold, and I think some of them are not going to go as a lot of people hope they go.
Okay. Mark, good talking to you this morning. Thanks for making time for us. I know it's a Sunday evening for you in Fort Lauderdale, Florida. That's Mark Grant of Southwest Securities sharing his thoughts.